say about my star panel here today. Both these gentlemen are truly long-term India bulls. And it's very rare again to have an occasion where I'm sure they're going to be competing with each other to say who's more bullish on the India story. So let's get things started. Before we talk about the India SME story, let's talk about the India story. I'm going to steal the line from Hitendra Dave's presentation. You said your first slide when you talk to clients in India and outside of India is, let's talk India. So Mr. Dave, let's start by talking about India. We are speaking here in the midst of uncertainties globally. We're speaking here in the midst of global macroeconomic challenges, particularly global banks find themselves vulnerable. We're seeing what's happening in the US. Flip that to India. Veteran banker KV Kama telling me he's never seen Indian bank balance sheets as strong as they are today. He's never seen better parameters, better metrics for the Indian banking sector than he sees today. I want to understand from you, what's changed for the banking sector?
Thanks Shereen, and welcome everyone. I think banks are a reflection, right? We are a mirror. So if bank balance sheets are good, that means the segments of society we serve, their balance sheets are good, right? I mean, that's how it tends to be in banks. So 5 years back or 6 years back, when everyone spoke about the twin balance sheet problem, the bank balance sheet problem was because of the problem in the corporate world, right? It wasn't because of anything internal to it. So if you look at the 4 segments of society broadly that the banking system serves or the economy survives on, right? Start with banks. You know, we've known about the amount of capital banks raised between 2019 and 2022. A lot of that capital was raised in anticipation of losses that would come in personal loan books, SME loan books, general corporate loan books, and lo and behold, almost everybody seems to be repaying their loans on time. That's the data point that Mr. Kamath mentioned about. So corporate balance sheets, including small corporate balance sheets, including retail balance sheets, all appear to be good. You look at government balance sheets, right? We saw the GST data for the month of March just now. I mean, April data, but March activity, 1,80,000 crores, right? Incredible numbers. I think 2 years back, nobody would have believed it. You look at direct tax data. So government revenues are good, and that means whatever government needs to do socially, free food, grain, subsidies, etc., it is able to do. Then you look at corporate balance sheets, right? I mean, the amount of deleveraging that has taken place. So I think as an economy, we are perfectly poised in the context of your opening comments on global geopolitical and economic issues that all 4 engines of our economy, I think, appear ready to fire. And now it's for us, people like the group here, to see what we make of this coincidental or consciously created outcomes.
Well, let me say it's a happy coincidence, if we can call it that all the ducks are lining up in our favor, in our advantage at this point in time. Mr. Kant, let's address the India story with you, sir. As we just heard there from Hitendra Dave, many things are looking strong at this point in time. There is, of course, the issue of deleveraging that's taken place. Corporate balance sheets are looking better, bank balance sheets are looking better, but so is the government's balance sheet. The government's balance sheet is also looking better. We've come off a record GST collection number. Direct taxes are looking strong as well. And the hope is that because we are less exposed to the global market, hence we are less vulnerable to the global uncertainties at this point in time. How do you see where we are poised today? What do you see as our biggest advantage?
So Shereen, I think first is that during the COVID period, we managed to digitize our economy in a very big way. Secondly, we carried out vast structural reforms, whether it was IBC, RERA, GST, lowering the corporate tax rates, redefining MSMEs here. All this. I think we also use that opportunity to provide a huge impetus to our startup movement. I think all these structural reforms will pay you results in the next decade and a half. Actually, in contrast to what's happening, what happened in the western part of the world, where they gave big packages, which led to now leading to inflation, then tightening of interest rates. And actually, if you look around the world, what's happening as a consequence of that, resources are flowing from emerging markets to the developed world. Whereas future growth, if you look at the global economy, the share in the global GDP of developed world is coming down. The share of emerging markets is going up. And therefore, the future of growth, future of job creation will all happen in emerging markets. And therefore, resources must flow to emerging markets. The contrary is happening because of policies pursued by the developed world. And therefore, it's very, very important that our banking system remains structurally very, very strong, that we continue to lend to our MSMEs. And it's important to say this because if you look around the world, our government to, the GDP, the debt ratio, the government debt to GDP ratio is high. The private debt to GDP ratio is low. It's only at about 55%. The private debt to GDP ratio in USA and China is at about 140, 150%. So the private debt to GDP ratio must rise in a very systematic manner. This digitization process, so what we've done, the account aggregator system that we've built up, we've linked it up to the bank, we've linked it up to the insurance, now we are linking it up to the GST and flows. All that, once it starts flowing, you will see a lot of more credit flowing from banks to the MSMEs, and that will enable MSME sector. MSME is very, very important because this sector is responsible for over 40% of our exports. This is a sector which creates jobs for India. If India has to grow with equity, if India has to grow with jobs, all these people present here are the key drivers of that growth and job creation.
And on that note, you deserve a big round of applause. So do applaud yourself for the kind of contribution that you serve to the cause of the Indian economy. Several points raised there by Mr. Kant, and let's address the issue of access to credit. I mean, I think everybody in this room itself will bear testimony to the fact that it continues to be a challenge. Now, let's talk about your book, for instance, where it is currently today in terms of your SME book, and what is the aspiration on how much you would like to see it grow further?
Well, I think as HSBC, I think the fact that we are there in this summit, I hope anything else I say will become unnecessary. We are doing this because we want to let our strong and drivers of the economy, as Mr. Kant points out, we want to play a role, right? Our book is growing. This book for us is growing at almost like 30-40% for the last 3 years. We've set aside a reasonably large size fund even for lending to startups, which is a very rare thing to do because, as we all know, startups businesses tend to be more about cash burn, and if you ask any conventional banker, do you want to fund losses, which is what cash burn is a euphemism for, then so we are taking the extra steps. But I also want to make a broader point here, right? I mean, there is a reason, and now I'm talking as the industry here as opposed to my bank per se. There is a reason why bankers have been largely cautious about lending to MSMEs, and I hope events like this and conversations like this and debates like this trigger that change which is much needed, which is that we are conventional lenders. We look at a balance sheet and we say, what is your top line, what is your expenses, and what is your residual profit to yourself. And in most cases you saw balance sheets and P&L statements that said, do not lend to me. I do not make money at all. I have no buffers if interest rates go up. I have no buffers if Now that was not true because these are very successful business people. I inevitably think everybody here knows that they will manage their business in such a way that they will never ever have negative cash flows, right? But the books didn't say so. So to the extent that now we have not just the financial statements, but correlate that with bank statements, correlate that with your GST and returns, correlate that with some of the digital invoice technologies we have, correlate that with their submissions to the EPFO, for example. A business is claiming I'm going like this, but the number of employees they're depositing pension fund for is going like this. So I think you will find the ecosystem for which the entire credit goes to the public authorities here, right? This is not done by the private sector, which is a unique to India phenomena.
Yeah.
As that ecosystem goes from one bank to the other, one borrower to the other, you will find there will be enough information which will make lenders feel comfortable that I am lending to somebody against a particular transaction or for holding of an inventory where there's enough track record that inventory gets converted into cash sales or so. So I think we are at the cusp of a revolution, and I use that word very deliberately, of growth which is on the back of credit expansion to MSMEs, because in India otherwise I would say about 1 million or 2 million families largely have got all the bank's credit in a country as big as this.
We're on the cusp of a revolution primarily on account of the digitization aspect and the flow of information?
No, that is an enabler. We are at the cusp of a revolution of how much money from the banking and formal banking system will start replacing because everybody still borrows. They borrow from friends, family, chit funds, whatever they call it, right? So that will increasingly get replaced. Interest rates will become more sensible. Banks will also force more discipline onto these entities, and that revolution, which is of growth, of employment, of exports, of companies M becoming S, S becoming M, and then M becoming hopefully in India Inc. I think that the seeds for that have been laid during COVID, and we will see every year it start happening.
So let's talk about this revolution, Mr. Kant, and I want to talk to you about this revolution in the context of size. In the context of size. You've often lamented about the fact that India has some world-sized companies, but nowhere enough. And for the Indian SME sector and the Indian MSME sector to grow and flourish, we need a larger ecosystem, a much larger universe of world-sized companies. Now, the government in the last few years has done things like the production-linked incentive schemes, ostensibly to build national champions and also to draw in foreign investment and build international champions who build in India. Is that enough? Do you also believe, as we heard there from Hitendra Dave, that we are on the cusp of a revolution? Is this an inflection point for the Indian SME?
So, Shereen, I'm a great believer that we are at the cusp of a revolution. We are at the cusp of a revolution because India has to grow at high rates in the next 3 decades. But for that to happen, MSME sector must grow. And for that to happen, 3 things have to happen. One is, MSMEs must focus on quality, quality, and quality. That's number 1. They must make quality products to penetrate global markets. We are not selling in India alone. We are a part of a global value chain. The value you get by exporting and becoming a part of the global value chain is about 7x more than what you will get domestically. So you must make the top class quality products to penetrate global market. Never compromise on quality, number 1. Number 2, we've done a lot of work on ease of doing business, but we need to scrap all rules, regulations, procedures for MSMEs, make this the easiest and the simplest way for there should be no human interaction with any government officer. It should only be digital interaction. Make this the easiest, simplest way for MSMEs to grow and prosper. That's number 2. Make India the easiest place to do business in, like Singapore or New Zealand now is the easiest place to do it. So we should aim to be the easiest place to do business in, number 2. Number 3, to my mind, Now we have access to data of bank, insurance, etc. But soon we'll have access of data through account aggregator system of the invoices and the way bill to the account aggregator, and therefore greater credit in a transparent manner will start flowing to the MSMEs, because for them to grow bigger and bigger and bigger, they need greater credit. And fourth, I'm a believer that MSMEs will happen only if India has vast number of large companies, because how did MSMEs come up? When Maruti came in and became a large company, you had tier 2 producer, tier 3 producer, tier 4 producers. So we need a vast number of MSMEs. After all, whom will they supply to? They'll supply to large companies who will then sell India or abroad or wherever. So you need large companies, you need backward forward linkages with MSMEs. They should supply and they should then be paid promptly. And therefore, India needs very many large companies. And when we conceptualize PLI was designed that we create large companies. We make things bigger and bigger and bigger and bigger in 5 years' time. And in 5 years' time, make India productively the most efficient economy in the world. And we were giving ourselves 5 years' time to make India more competitive than China is right now. That is the challenge before the country. That make ourselves in logistics, through Gati Shakti, through a whole range of through better roads, better ports, providing linkages, that in 5 years' time, India should be more productively efficient than any other country in the world, and then make these MSMEs grow and prosper.
You know, I want to pick up on both what we heard there from Mr. Kant as well as Mr. Dave, and come to the audience. Let's do a quick straw poll of the audience. Do raise your hands if you're in agreement with Hitendra Dave that Indian SMEs are on the cusp of a revolution. That's not, I wouldn't say that's even 50% of the room. I'm trying to understand why the business confidence of the Indian SME is not reflecting what we heard from you. Let me also understand, again, from this room, if you believe that ease of compliance has improved significantly. If you believe that ease of compliance has improved more than 50% in the last few years, raise your hands. That's an even smaller number than the previous show of hands. So let's address this issue. While, you know, we might rank better on ease of doing business indices, etc., this room seems to be telling you a different story, Mr. Kant. Where do you believe the missing gaps are? Where do you believe we need to do the work?
So one is that I think the government of India has become very easy and simple. A lot of homework needs to be done by the states. Most MSMEs get in touch with the state governments. We need states to become even more competitive by scrapping a lot. So we've done this exercise on rules regulation. Most of them relate to the states now. And therefore, a lot of rules regulation procedures need to be scrapped by the states. And therefore, my view is that we need about 10, 12 Indian states to grow at about 10% plus. And if they grow at 10 to 12% plus, then India will grow at high rates for the next decade and a half or 2 decades. That's important. The real energy has to be brought into the states now.
Let's talk about one of the challenges that I would imagine that many of these participants in the room face, and that is the cost of capital. It's not just access to capital, but it's also the cost of capital. We've seen what's happened as far as global interest rates are concerned. The US Fed hiking rates by 500 basis points. We've seen the RBI do a hawkish pause at this point in time. We've also seen where the 10-year bond yield is today. What do you make of where we could potentially be when we talk about the cost of capital?
So I think at a broader level, I hope many people are puzzled, right? I am also puzzled why on the day the Fed raises rates to the highest in the last, 20 odd years.
We're at a 13-month low in terms of the 10-year yield.
Exactly. And you know, the policy rate in US is 5.5 to 5.25 now, but the 2-year yield is below 4. and the 10-year yield is also just around 4. So it is the bond market which prides itself on being way more intelligent, by the way, than the equity market, is sensing that something is wrong in the West. Okay? Now, we will see who is right and who is wrong, right? But to this audience or the viewers here, what the Fed funds rate is, what the RBI repo rate is, I think the direct implication is relatively low. That's much more people who issue bonds in the international capital markets or even raise money from the bond market locally. I think that's that segment which is much more sensitive. What is more relevant for this audience or for mid-sized corporates and below, I think tends to be the cost of funds of the banking industry. Now, your channel is making so much about the fact that bankers are out there in societies on weekends, raising deposits at exorbitantly high rates. So, you know, just as they do business, if raw material cost goes higher, they try to push up the product price higher. We also, unfortunately, are also answerable to our shareholders. So if the cost of deposits is going higher, then the lending rates will go higher. But that said, at least my observation, and this is an observation I have shared with many other senior bankers, at least in Mumbai, is that for well-run MSMEs, I am almost certain cost of funding actually has come down on a relative basis in the last 4 or 5 years or so. You know, what used to be standard double-digit, going towards teens, that's increasingly becoming less and less. But I do caveat that with well-run, you know, MSMEs who are working with banks to ensure that there is transparency and there is governance and there is disclosure. So if whatever I said in my earlier part is going to come true, that is, I get so much information, not from the borrower, but from the data ecosystem, that my credit comfort goes to the point Mr. Kant makes, that if the very large companies crowd in a lot of supply chains and MSMEs, then I'm effectively taking a risk on the large corporate. So the borrowing rate for the chain in between should have some of that and some of the quality. So I would actually say that on average, the spread between RBI policy rate and rates at which MSMEs borrow over the years has come down quite dramatically, and you can verify that separately also.